Okay, thanks everybody. Today is our second session and really want to talk about the harmonic pattern collection execution strategies today. We're going to spend quite a bit of time going into really what this is all about of creating an actionable opportunity. But as I started with yesterday, we want to come back to a first principles concept. Okay, every time we go into any opportunity, and this is for any methodology, okay, there's only three outcomes for any situation that we want to assess. And those are obvious outcomes of whatever our strategy, but from harmonic pattern perspective, it hits the PRZ, gives us confirmation. And we're going to talk about those confirmation conditions today. And those give us signals for an anticipated reaction, at the zone, at the measured levels. And that's within a relatively short period of time. So expected outcome number one, it works out within the framework of what we're looking for. Expected outcome number two, we see this frequently. It will give us lots of signs of exceeding the measured zone, the potential reversal zone, and go beyond the terminal bar. It'll give us some warning signs, some things that we'll look at today, some obvious stuff, and then some things I don't know if I've mentioned before. And then the other situation is we get into kind of a consolidation phase where we hit the numbers and we do a pause, which is actually very common for patterns that are going to fail, where they just go sideways. And we still are looking for reactive expectations. We're looking for a reaction, but a lot of times we're going to get a time limit to those situations. Again, we're going to talk about those strategies. But the key for everything that we do and the strategies that we bring into this decision-making process is all about an actionable opportunity, taking that measured structure and creating that, taking those levels and turning that into a defined opportunity. I don't think, a lot of people, there is a lot of talk about the patterns and just drawing patterns left and right. Ultimately, though, what we're talking about are levels. And we really can't even talk about a trade opportunity until we have distinct triggers, distinct confirmation at the zone. So we have to get that right. We have to get our patterns right, because the whole process starts at the terminal bar. And that's what we focused on yesterday. And the terminal bar of getting those measurements right that we've done in the harmonic pattern collection actually makes this an easy process. It makes it a much easier methodology. Otherwise, it is a very difficult methodology. If you have to measure every opportunity by hand, you're going to make mistakes. So once we can ascertain an opportunity by the pattern that the software and the algorithms generate, we then focus on terminal bar, where that's where the execution phase begins. And we treat everything, every opportunity, whether it's, say, a type 1, type 2, first time it's tested, whatever, we treat everyone as a reaction. That's also an important principle, that we are really demanding a reactive result. So however we stack our analysis, we're looking for multiple variables that confirm the pattern, and then we have an expectation. We'll look at some individual price action strategies today, how we look at that in the zone. And then again, the time limit situation, we'll talk about that. I've mentioned that a lot, of looking at a pattern completion 30 bars on any time interval. There's a reason for that. And it also gives us kind of a stopwatch on every opportunity, that if we're in a trade, then we better take a corresponding action within 30 bars, or something should be happening to lead to that next corresponding action. Finally, we have a little bit of overlap. We'll look at that towards the end. And actually tomorrow, when the management material, we'll really focus on the management timeframes. But for execution purposes, we do want to reference and be aware of what's happening on, say, a larger time frame or a smaller time frame. So there's going to be overlap today. I really want to focus on the execution stuff, because everything that we're looking at, we're considering, is to take all of this information and distill all these individual trades, and then distill that, analyze that into a subset of data that manifests the harmonic pattern properties. That's what the software does for us. All of those identification rules, everything. I mean, literally, that stuff was 10 years of development. That really, for me to even just identify the structures, and then another 5 years on top of that of software development to get the right patterns. And we see that in the terminal bar. And so that's, again, yesterday, we left it off at terminal bar, at the terminal bar check back, that last retest in the zone. And now we kind of move it forward where we want to validate terminal bar. We're looking for that actionable opportunity. Where is the thing a trade? Where is this pattern and these levels? Where do we click the button? And then how do we handle it? So again, that's the overlap into tomorrow, but we want to have kind of a super focused mentality at that completion point when we see the confirmation in that zone. And again, treating every move as a reaction, as it should react. I mean, that's what we're looking for. We're looking for a response from that measured harmonic pattern. Bring in a few constraining limits of like a 30-bar time window, or individual analysis of, say, is it the first time it's tested? Second time, what are the considerations of stop loss? How far can we let the price action go beyond the pattern? Again, all of that really critical for how we line up an execution. So where we left yesterday, again, was essentially at the close of the terminal bar. And that really looking at how the PRZ and all of our measurements are encompassed by that terminal bar. But we can look at the PRZ and see obvious signs of failed or flawed signals. These are avoidable signals where if we're looking at a pattern and we're analyzing or waiting for the terminal bar to complete and it completely goes through the zone. We've seen that recently in some bearish opportunities that, with the market being very strong, just completely bypassed a lot of zones. This is where we just wait for terminal bar. That's why the terminal bar in yesterday's material was critical, is critical, because those are obvious signals, avoidable signals. And it's something that I learned, and I want to share this with everybody. You know, a friend of mine, guy that 20 some years ago, Mark Douglas, who's a famous market psychologist who has passed away a few years ago. And I was really fortunate to actually make his friendship and have hours and hours of conversation on avoidable issues for traders. And this is something that everyone should think about. And harmonic patterns really demonstrate it, that it's really easy to get excited about harmonic patterns, and then get, you know, too enthusiastic to where we can't even wait for terminal bar. And that's why a lot of the rules that I created were designed as kind of mechanisms of a system where the best opportunities are coming well beyond the pattern. And the failed or flawed signals in a lot of failed harmonic patterns will be obvious. So that's why we wait and we're looking for that consolidation. And, you know, in a lot of my discussions with Mark, you know, it's funny how when we get into the act of execution where there's real money on the line and we're clicking the button, our brain can go squirrely on us. And then it goes into a whole different kind of mindset where we can't even avoid the obvious signals. And this is my, really kind of something that hit upon me of the patterns and what the best patterns meant, because a lot of times we can see something that forms that agrees with what we're looking for. We get too excited and we want to jump the gun and we don't wait, or we get in too soon, too early. So today is about looking at those signals, really focusing on avoiding what are flawed or failed patterns, and then looking at the obvious signals that help us, what I like to say, locate trades in the zone. We have the larger zone. Now we want to get it down from that wide zone into an exact price level or a very narrow spot. Also, we'll look at the sequence of execution triggers. As we said yesterday, everything starts after terminal bar, or even ideally after the terminal bar check back. It's a little consolidation, and then we get that reaction. We'll look at some of those confirmation signals, but these are what make a harmonic pattern actionable. It is the go time. There's really, if we have the triggers, HSI, some of the indicators we'll talk about today, then any decision really comes down to, are you able to accept what the risk reward scenario is? Tomorrow we're going to look at how to quantify risk reward and why it's so important. But if we can really we can locate our trades in the zones with precision and with indicator evidence support behind us, those triggers, okay, we're going to have enough of a technical evidence for at least a reaction that we can handle. And again, that's something tomorrow where, when I talk about, we position for reactions and then we manage for reversals. So today we're going to look at those triggers. Tomorrow we'll look at how we look at managing for larger moves. So the PRZ validation that we have to look at, that tells us in advance what to kind of watch out for, because again, the measurements, the framework, the patterns give us our expectations. We want to also coordinate the PRZ. Okay, that is the important part. And again, a lot of people ask me, well, where exactly should HSI or RSI come together? Before the zone, after the zone, exactly at the terminal bar. And again, that's defaults to usually a 30-bar assessment. We want to see it within a 30-bar window of the pattern completion. But all of this just relates to where the terminal bar completes, how far beyond, and then where do the indicator triggers complete themselves relative to that pattern. We'll look at kind of just bringing together multiple signals at the same area. But let's look at the obvious signals first. This makes it easy. When we know what fails or what signals are potential issues, then it makes it easier to sort out those more valid candidates. And some of them are just obvious price action continuations. We hit terminal bar. Let's say we're looking at a bullish pattern and we sail on through. We have zero individual price agreement where the price action agrees with the pattern. Or even worse, we go straight through the hop level. These are all signs of clear price action just blowing through the pattern. And again, it's all what happens after the terminal bar. Pretty easy to assess as long as we wait for, on the software, for the sun icon to generate. So we look for those, or we will avoid those that gap through the PRZ or even through the stop loss, and then even extreme price action. Hey, Jeff, I'll come back to that question in a second, but it's a good one in terms of that pattern. The quick question was, when we get the terminal bar and we're waiting for that completion and the price action temporarily forms the sun icon on the software, sometimes it goes away. That's probably because the pattern hasn't officially completed. It is something with the program where you have to wait for the whole software match to complete on the chart. Now we're going to see this, and it'll be pretty obvious. A lot of times, especially when it's the market opens and in stocks and it gaps right on through the zones, or in futures, or a major announcement, you get that incredibly strong action that goes and just bypasses the PRZ. And it happens a lot more than you would realize, where you're looking at an exact area and it gaps right on through. It will be obvious. Those will be just straight on signals where you're sitting at a PRZ like this with a hop level and say this is some kind of a stock, and it just blows on through. It doesn't matter if that's a retracement pattern like a bat or a Gartley, or that could even be a crab. Sometimes, and we'll look at this tomorrow with the crab in particular, of sometimes that could be an opportunity, but usually the continuation is always clear. You go to terminal bar plus 1, 2, or 3, it's going to be just continued lower lows and a continued move where it just goes straight on through. This has been, Tesla, for example, Bitcoin, a lot of your very strong movers that just gap on through. The key is the immediate bar after. And if that is exceeded, it usually is a continued failure. And the other one is the extreme price expansion. This is something, again, where we see quite a bit of. And really the key for a lot of that for us is where does the indicator confirmation come into? But a lot of it has to deal with how hard does it come into the zone, what happens at the terminal bar or just beyond there, because a lot of times at the terminal bar, you're waiting for that pattern to complete. It's going to be obvious. You step aside. It'll look like something like that, just straight on through PRZ and with continuation. It's an obvious signal, but again, the easy solution for it on the software is to simply wait for the terminal bar icon to generate. It just keeps on going through. And then the final one is the individual bar continuation. And this is something that I've mentioned before, and then talked about how you have a bullish PRZ and you get extreme action into the zone with a bullish continuation. With a bearish continuation. Bar over bar, a singular bar. Tomorrow we're going to look at those kind of serial management strategies where it will just continue, and we look at each individual bar for how to manage that. But when you're looking for the completion here, especially PRZ or the hop, and it just continues on through, your terminal bar complete, and then the next bar continues. It's just demonstrative. You step aside. The other thing you'll see with these situations is you will have no confirmation. Again, another reason people ask me, should we wait for confirmation? And I say in every instance, because these situations that are quite strong, they might form your confirmation well above the zone, but we're certainly not jumping in front of the trade. It's something that comes with waiting, and we'll look at HSI today. But again, when HSI triggers, that's usually the first sign, at least the first indicator agreement that we want to see. Now, the price action confirmation, again, we're analyzing that agreement. And a lot of things that I'm talking about are what strategies, what indicators agree with the pattern that is being displayed. We're looking for obvious, ideal bearish situations, conditions in the indicators that line up with the individual bars. And a lot of times you're going to see a terminal bar be established, and then there'll be a sizable consolidation phase. So that kind of stalling behavior will be obvious, and we'll look at that because we'll look, the indicators will show it for us. But those situations that blow right through, okay, those will be the easy demonstrative cases that are easily solved by just waiting for the terminal bar or terminal bar plus one or plus an indicator. It's usually an immediate one. Now, let's just take a quick look at price action, at an individual price bar, because I'm going to talk about a 3-bar high, a 1-bar high, a 1-bar range. These are ways to be looking at continuation, ways to be looking at changes in the PRZ. Now, most of what we do are Japanese candlesticks. I'm not going to spend too much time on this today. A normal candle that historic is the open, high, low, close. Okay, standard bar. Now, what's so important is that we will be looking at these candles at critical levels relative to pattern, to our indicators, or even HSI. Candlesticks are what we want to focus on. Candlesticks give us really, I think, the most illustrative price representation relative to the pattern. And then, of course, they're great for kind of rounding out the pattern, but are bullish, bearish, pretty obvious. Again, I'm not going to spend much time going into formations of candlesticks. It's an entire subject unto itself. The two guys you should check out in the industry are Steve Nissen and my friend Greg Morris. Greg Morris wrote a great book on candlesticks as well, and he's an accomplished fund manager. But the candlesticks are really fantastic for showing even patterns like the doji, which is a really simple candlestick where the high, open, low, close, pretty clear, demonstrated in a cross, where basically open and close are the same. And that shows a market that's uncertain. And the doji is great for future direction, especially when we get to a harmonic pattern. And we'll look at some examples in a minute, but these individual candles, the more you take a look at them and then combine them and look at the price action in the zones, you will see relationships. The other common pattern formation is a hammer. We see that a lot as it's consolidating in the zone. We'll look at one or two in a bit. But these formations you should definitely take a look at because they're signs of, those are the price action signs of directional change. And really what we're looking for in those zones in every execution is those signs that give us a directional expectation for a harmonic reaction in the PRZ. And so we're going to look now at the triggers. So we know that the PRZ and the terminal bar, something's supposed to happen after that. But we can now get even more specific and say, okay, what's happening after the terminal bar? Or remember yesterday, we talked about the terminal bar check back where that gets established and then we have a retest of that bar. So we're talking at least where if you have a any kind of a harmonic pattern, you could have 2, 3, 5 bars. If it's an hourly chart, that could give you a window of 5-6 hours, and a very specific window, but plenty of time to capitalize on the opportunity. But it is within that window, and then once that completes, okay, the whole directional reaction has to happen. Again, we start the clock at the 30-bar window. The other thing about what we're dealing with in executions and how do we identify signals or microprocesses of what are those indicator signals, formations that'll give us a possible reaction. That's what we're looking for. We're just looking for signs of a reaction in that big zone, because that gives us at least then evidence of, hey, if we get a short-term reaction, that could lead to something larger, and we'll assess that as that happens. Okay, but these signs should definitely appear relative to the terminal bar, and they will appear early. That's the other thing, is we're dealing with predictive signals that you have to understand what you're looking at to know where the opportunity is going to come. So think of it as a light switch. I've talked about this before. Talked about how harmonic patterns are a process unto themselves. But once that process has completed and we're looking for that move, okay, harmonic pattern's completed. It's supposed to, the market's supposed to turn at that harmonic pattern, right? Well, there should be some other things going on there. There should be some definitive things that are happening that not only are pretty clear relative to the pattern, but then some smaller confirmation formations, individual reversal candle behavior, all of that relative to the zone tell us, okay, what's really going on in this area? How far beyond the measured levels do we need to give this? Or even better, if let's say we have a pattern completed, but the indicator confirmation hasn't completed, the RSI, the HSI hasn't come out of the zone yet, that tells you to wait. Is a kind of a series of questions you go through and ask yourself after the pattern's completed. And one of the basic questions is assessing the structural indicator type. Okay, we're looking at a single test. Are we looking at two tests? What's the formation there? What can we expect? Because depending on what type of formation, depending on if it's multiple tests, if it's divergence or confirmation, these aren't tough concepts, but we just have to look at a few of the possibilities that can unfold because they are distinct and they have distinct expectations for each. You know, we still fall within reaction reversal framework every time, but if we have some ideal complex formations, then we have a better idea or possibility for expecting a larger move. Now let's just first start with an impulsive indicator structure, and this can be for any structure, RSI, HSI, amplified. This is a basic, everyone knows this formation. It's a quick, hits the extreme, tests, doesn't consolidate, pops back out. A lot of times those can be random readings, but we want to still pay attention to them when they're combined with the pattern completion. Now we'll take RSI because that's really where I started with. I started, of all the indicators, I felt RSI had the strongest correlation, the strongest predictive capabilities with the patterns, and was finding that with the patterns, especially with the best impulsive readings, they were happening, you know, within 1 or 2 bars of that initial test at the terminal bar. And they were giving us a V or an N formation. I think that's off a little bit. But the general indicator, just the fact that it hit the extreme, that you hit an indicator extreme at that level, at a pattern level, is really what sets it off different from anything else. Now, real simple, we're looking at an overbought, oversold extreme in RSI. Okay, we're just simply looking at the indicator formation. RSI, there's plenty of information on the site. There's an entire webinar presentation in the Gold Members page about RSI, the formula, and how it's calculated, but it's just simply looking at an average of prior price action going back usually 14 periods to assess how the current price action is different. So we can move from oversold, which is below 30, to overbought, which is above 70. Now, that extreme indicator movement, again, we're coordinating that indicator movement with the reactive capabilities of harmonic patterns. That's, talk about first principles. That's the first principle of confirmation. We're trying to capitalize on both extremes, the extreme indicator and that reaction off of that indicator versus the pattern reaction. Why? Because the markets, as we talked about yesterday, first principle of the markets is they have to move. The first principle of the markets, they have to move to exist. If they have to move, they go up and down. If they go up and down, they emit a frequency. That's where we jump in with harmonics. That frequency, that's what indicator structures show you. They show you an extreme of the frequency from a dynamic range from one side to the other, and then the patterns too. You put those together, then you get stuff like what we had. Here's our example, NASDAQ 5-minute. We looked at this yesterday, this crab pattern. Okay, here the circled indicator is simply just that quick V shape in the zone. Okay, don't want to complicate it more than that. Just want to look at the simple fact that we are hit the 30 level and come out. Why is that important? Because the relative strength gives us at least an area where a short-term oversold signal or reaction we can capitalize on just even that simple movement. Now, it might not follow through. It might, like, look at the prior reading, okay? Really nice deep reading here, and we get a reaction, but no follow through. But I can still manage that. As a trader, that's a really important concept, that this little reaction, the fact that we are oversold, meaning we've moved too far, too fast in one direction, and that we know the market has to go up to go down, vice versa. And we're looking for that extreme reversal as a minimum for some type of reaction. Then we overlay our pattern, or we have our pattern zones where we know, okay, there's some harmonic support here. That's the basic concept of extreme harmonic zone, extreme indicator, and then we get the reaction. And it's early. I mean, this thing comes out of the zone and pops out several bars before the larger reaction even takes shape. That's an easy assessment, confirmation. That's kind of the fundamental first principle of confirmation. Now we look at, and this is something where then I jumped off the rails, I guess, if you want to say it that way, but this is where I guess some of my interpretation with relative strength really has taken hold with people who do harmonic patterns and help people understand these formations better. I give Wells Wilder all the credit in the world because that guy's a genius for the formula, the relative strength formula. And, you know, he's been around for decades, and, you know, he released that indicator, and it's probably the most popular indicator, period. And it's excellent because it does such a fantastic job measuring relative behavior. But I found that the relative strength index didn't respond the same time to every extreme. And that's where then the complex structure, this M or W formation in the extreme, if it's RSI, if it's amplified, if it's something else, it had a different significance. It required more time, and the resulting price response was usually different than an impulsive move. So that complex reading actually has different expectations and actually is treated differently than the impulsive reading. Again, it's a W formation, and if we're in the extreme, the entire W has to be there. Now, that's important because it sets up other rules for what we'll look at. But again, if we're looking at that W formation, again, it takes more time. It's more reactive, and we usually do see consolidation in that area. So something that is a complex structure that does not have price action, that is reverses demonstratively. Let's say it hits the zone, pops out, and only goes sideways and kind of drags. That's just a sign of requiring more consolidation. Whether or not it goes lower, it's still at this point here. We know that symbol, that W, that formation, could take 10, 20, 30 bars to resolve itself. But our expectation is we just think more time. Really important. Impulsive formation, let's say we came down in a V formation and then we broke out like this, I would say, okay, that has more of a continuation behavior to it. I'll get into some of the confirmation aspects of this secondary test, but again, it'll be more demonstrative. Where you are 3 or 4 bars starting to break out, you're still in the zone, still in a really nice pattern zone, but it's signaling in a lot clearer demonstrative fashion in the indicator as well as the price action. I mean, here you have a clear W formation and it just kind of goes sideways or drags down. We'll look at some examples here in a minute, but again, you see complex formation, you're thinking more time. And when it's with a pattern, it can still be a valid signal, but again, we expect more consolidation versus the impulsive. The impulsive should hit and go, hit and go. We'll look at these in a minute. Now, we combine complex formation and we combine the impulsive formations because the key for all of the indicators that we do with RSI are 2 tests. 2, we're waiting for 2, much like we talk about type 1 and type 2 pattern completions. And we'll talk about type 1 and type 2 management tomorrow, where all harmonic patterns give us usually 2 tests. And in fact, the larger move for harmonic patterns comes on that secondary test. In that same way, we're looking at 2 tests in relative strength for our biggest confirmation signals, and that's either confirmation or divergence. Again, this is an early signal, so don't be surprised to see this thing complete. Give us the confirmation in advance, and then we have the larger move develop later. But we're looking to simultaneously analyze that. See that in the potential reversal zone. That's the other thing. Has to link up with the pattern. All this stuff has to link up with the pattern zones. And the beauty of it is that the software generates the patterns for us. So we're not calculating by hand. There is a consistent methodology and a consistently effective way based on the algorithms to generate those pattern matches. And it's up to us then just to highlight what's happening in those zones. You know, there's some of this that I am currently working on to optimize in the program. I can foresee something down the line where some of these special situations that I'm about to show you are highlighted, making it even easier. But it is important to know the finer points because all of these measurements that we go through and we look at shape our expectations to know, do we give it more time? Are we sitting there? Do we execute in a faster time frame? Or do we expect it for more consolidation? We're not surprised if it goes past the PRZ. That's what these strategies do for us. They make the expectations clearer. Now, when we want to look at this confirmations and divergence conditions, okay, we have to look at the combination of the indicator formations. Combine that with the patterns, and the software does it automatically, and we'll look at that, how it highlights on the charts. But again, going back to not only the 2 formations, but specific tests of the extreme. Now we're talking RSI, we're looking for those 2 tests, usually separated by an in-between 50 level. And again, we want to look at that either at the pattern completion or between the 2 patterns, looking for the first initial completion of the complex test and then look for a retest. Now, let's just look at the formation first and look at the 2 tests, because this is going to give us a really clear idea of where we look for our best execution, optimal entry for a pattern. Where is the pattern relative to our RSI BAMM or our entire indicator formation? Because how it comes together, a bullish RSI BAMM is We'll get an early signal first with a W formation below the oversold reading. Then this is where, again, really representative of the consolidation that occurs. And there will likely be a little reactive trade that happens here, but the larger move that we're looking for, the larger confirmation of the price action, occurs on that secondary test. And depending on at what price level, will dictate whether it's confirmation or divergence. If it's confirmation, we're usually looking at a retracement level. This at the B point, that could be a bat or a Gartley. Not a surprise. If it's going to be, and we'll look at the divergence in a second, and those are usually extension patterns, but the key is the sequence of the W, go to the 50, and then come back for a quick impulsive retest. The impulsive reading will be higher than the prior, the price will be higher, and then the response, this is where our best reactions can occur. And we'll look at this on the chart because the software does it all for us. And it will highlight, and so let's look, because you might want to say, all right, well, where's the W, Scott? You know, how do I know it's a W? Is it below the extreme? Just look at the software where it does it. Now I've got amplified and I've got standard RSI. Let's start with just the standard RSI and how that lines it up, because here is a couple of W formations. There's one, there's a second one. How do I know which one to use? Let the software set it up for you. So the software is going to give you this dotted line when a complex reading comes out of the zone. And then when it gets up to the 50 level, remember that 50 level, that is our minimum requirement between the two tests. Go here. There you go. So we get a W formation. And again, even a simple complex reading, we still know that's representative of consolidation. So even if that goes up, eventually that's got to get retested. That's how we treat it. And if we can see this go to the 50 line, again, that sets us up for that eventual retest. It might drag out and take quite a bit of time as it still goes higher, but we look for an eventual secondary test. And that's what happened here. At our XAB point, a really nice RSI W formation comes out of the zone and actually goes all the way up. This is amplified to the other side. Here's standard RSI on the bottom. Now look at your green line. Okay, that's the 50 point. That's the indicator hitting the 50 line here on standard RSI right there. And let's stay on standard RSI. Because right there, that sets us up where when the green line starts, okay, we then get ready, because this eventual rollover and retest is where our bigger opportunity sits. Again, I talked about this yesterday. We will focus on it more today, of where that green line stops. That means the completion of an entire RSI BAMM. Now, how do you know if it's confirmation or divergence? Does that matter? Not necessarily. I mean, we just look at what pattern forms from point to point. If the D point, if your formation is below the prior, the price is below the prior reading, that's divergence setting up. And that's important because that can only go so far. If it's a tighter consolidation and we see the green line and our price is above X, that's going to be confirmation, and we should see some type of retracement pattern. And that actually, again, helps to kind of formulate how far this can go. Because if we have a divergence here, a really nice 1618, let's say this thing totally failed and just kept on going below our hop level at 12,483. And that thing's got to like 12,475 or 12,470, and RSI falls apart. That tells you that predominant trend is quite strong. But on the contrary, in this instance, your green line stops there, a little bit of consolidation, but really nice pattern. And then we come out. And again, look how early that is. That is an early expression, if you will, of the divergence being completed. Now let's look at this a little more in detail, because here is that W formation. This time I'm showing it on amplified RSI, and I'm going to get into the difference of amplified versus regular RSI towards the end, but we treat them the same way. Again, W formation, look at that little dotted line on the complex structure that sets up, and then our green line goes on right there. Okay, right there. That's where we start to think, all right, the indicator is going to roll over, and it has to come back and retest. So notice that little retest almost hit, but it didn't get past 30. That's the key. That didn't get past 30 until all the way down here when it finally breaks down. That's something else to consider of looking at when that green line goes on. This still may go higher. This reaction here still may go higher, but monitor that green line, because the way I think about it is that green line has to stop at some point with some kind of indicator retest. So my assumptions are, when I see that, this is reactive. I mean, this may give you, there may be a great long opportunity here that gives you a nice thrust move, but because it's preceded by a complex structure, W formation, I know that's got to get retested at some point. And so again, this is where trade management really comes in to help us, but we'll look at how far that can go. But once that's violated, let's say the uptrend got violated, indicator rolls over, whatever opportunity was here, you're out and you're looking for the indicator retest. But that's how that stuff comes together. And we'll look at tomorrow, look at how we can assess this complex formation and use it in management situations. It really helps to define direction. Now, let's look at the RSI BAMM, the confirmation divergence of what really, how that comes together with patterns. How do we look at the complex impulsive indicator combinations relative to the PRZ? Because it doesn't happen. A lot of times people ask me, well, does RSI BAMM have to happen from X point to D point? Doesn't necessarily have to. It can happen in the CD leg. It can happen from X to D. It can be an super ideal situation. The key is just to have your minimum requirements satisfied. 2 tests, complex structure, go to the 50, come back, retest. Those are the signals that help kind of form our expectations and really shape direction. Now, here is Dow Industrial E-mini on a 15-minute. And this is a great one where we see a huge move with a complex structure. So even if we had a pattern down here, let's say, and you had a complex formation, a W formation here, just look at how that move came back. The indicator hit all the way up at a high level. That's what I mean by expecting a retest. Your green line goes on, and despite the strong move, you still got that rollover and retest. Let's look at some of the bullish RSI BAMM confirmation and how, if we're looking at a retracement pattern, how that comes in, because again, those are the 2 tests. They're not, and I will say this, the confirmation situations are not as prevalent as the divergent situations. We see a lot of crab patterns. We don't see too many ideal Gartleys. Those are tough to come by. But when they do, and you get the ideal situations, yeah, they're fantastic opportunities. Now, we want to see that final RSI BAMM complete, usually at an 886 or 786, one of the minimum retracement levels, and then followed by fairly demonstrative indicator behavior. Again, this is going to be an early signal, and usually take, a fair amount of time where, they'll trigger at, in this instance, at a retracement level. Here you've got a deep crab, okay, but it is, let me go back to this second here. Okay, but in the confirmation, again, really want to think continuation with these type of situations. If we have a retracement pattern or any kind of retracement level within the trend, it's going to be a strong continuation. Again, they're not as prevalent as, say, the divergence situations. When they do, though, think more, I think, continuation. Here's a bearish RSI BAMM confirmation. Again, we get the mandatory complex formation, go to the 50, hit the impulsive retest. Here's another at the 886. Okay, take a look. Here's your M formation. Goes down to the 50, then it takes its time. You actually, I don't know why I've got that deep crab. You've got the 886 is really, there's a bat pattern there. Yeah. Focus on the 886 because that's at the preceding high, your XA points there. That's where the complex structure is associated with the prior high. But even though this had a nice strong move off of that top initially, come back, retest, that's Euro Aussie, by the way, hit the zone and then roll out. Again, where the red line stops, we start looking. That's how we utilize it in terms of the software. Bearish RSI BAMM confirmation, really we start to look at that at the 786 or the 886 ratio when we hit the overbought level. And that's, again, in this example, there's Euro Aussie 4-hour. When we get overbought, where's the big retracement level off the top? And trigger that with demonstrative move out of the zone. But we know it's an important point. It's not just a normal test. Why? Because it's preceded by that red line. That's where the complex reading stops. Also, look at our dotted line. There's our dotted complex line. I think it's a little clearer on this chart. That dotted line, and you'll see that on all harmonic pattern collection programs, that marks the high of the move, the extreme of the RSI move as well. That's good, especially for stocks that are aggressively trending or break new indicator highs, which, again, we'll talk about indicator management tomorrow. But this shows you a lot of the elements of RSI BAMM. But for our purposes, now that you know the details, the simple part of it is we want to be looking for patterns after the red line stops. Now, the divergence of what I'm talking about, those are the better situations. Those usually happen at a 1618, but even the best situations are taking out, they're moving below the prior, or moving beyond the prior price point. Typically starts with a complex reading, get an M or W, and goes to the 50, and then retest the extreme. That gives us everything that we need to know, where then we know we've got multiple formations in RSI. I like to call them environmental readings because really the RSI BAMM is a specific type of environment. The bullish divergence, again, we start with a complex oversold reading, and then the final retest is either going to occur at a 1618 or a 113. And it sets up like this, guys. Usually price action, again, we see a complex formation. We think consolidation. This is not a surprise to see this type of bouncing behavior, consolidation behavior associated with the complex RSI. Even though it's an illustration, that's kind of is exactly what I'm trying to express with this type of formation versus the impulsive RSI. The other thing that I want to show everybody and highlight is that once we get above this 50 reading, and we know it's a divergent situation because it's rolling over and violates the prior X, we're going to see the indicator break down pretty heavily and then price accelerate once it gets through that X point. There's a great example of it. There's Kiwi dollar on the 60-minute. And that's got everything we want to see here. There's a complex structure. And look at the price action up here. Really ugly. No constructive reaction even, and continuing to break down. Even though that does it, the real RSI BAMM happens because we hit the 50 line. Look, that's where the green line goes on and come back. And then we start looking. Green line stops. We start looking to the right, and we're waiting for that to come out of the zone. Come out of the zone. With the pattern, and this one at a 1618, price is heading lower while our indicator is heading up. That is important. 1 second, folks. Hold on. 1 second. Let me take a sip of water here. 1 second. Okay, I'm back. Sorry, I had to take a quick break here for a minute. Already going 1 hour. Let's take a second here. Already here in an hour. And what do I have? I've got about probably another 30 to go. And I do want to bring out the programs. We're going to look at some situations happening right now with confirmation techniques. So we're going to look at that, look at all of this, finish up with some questions. So let's resume back with our RSI BAMM here. That should be bullish, by the way, but we're looking for that completion. Now the bearish RSI BAMM, again, focusing on the overbought measure at a 1618. I think the 1618s are giving us the best situations with RSI BAMM. Here it is where clearly set up our complex structure. M formation goes to the 50, then comes back for the retest. And this should be demonstrative after it comes out of the zone. Here you go. Here's a chart from gold. It's from a while back, but great long-term example. And I think looking at long-term charts is a great way to look at the relationships and understand how this stuff comes together. One of the things that I did a lot of early on when I was kind of unlocking the divergence and confirmation strategies is especially longer term charts to see how the news played out in relation to some of these larger scenarios. So interesting. I would see huge divergence divergence situations when the story was extremely bullish. And a lot of these big divergence signals will happen in final phase moves. This one, here's gold on a daily. And again, look at how within the bat pattern, there's our complex structure, M formation. Notice reaction, and the indicator comes back and gets retested. Tomorrow, when we talk about framework, okay, and management framework, we will look at how this complex structure can set us up for actually an opportunity, because we can utilize that complex structure once we hit a target. If we know it's got to be retested, then we can add that to the tools of analysis to know and say, okay, hey, we got to give that more time. Or I'm not surprised to see if that comes back for a retest, And then when it does get retested, we analyze what's going on in the zone. I mean, that's where we know things have to happen. When that red line stops, we're looking for the bearish opportunity. Here is the price action in the potential reversal zone. And look at how, again, that falls out of the complex structure. Here goes almost right to the 50 level, then goes sideways. That goes sideways for a while at our target before resuming back up. And we'll look at some of those situations. One thing that can be done there, you can throw a trend line in there. Take a look at this. You can bring in that, let me bring this over here. So we could take that trend line, okay, of the indicator, and let's say we're assessing how that comes off of the PRZ. You can put that trend line like that, and knowing with that and the 50 line, the reaction's just about over. Even though it took the better part of 6 months or more to clear out, we know the bulk of that move is over. Why? Because we know this has to come back for a retest. When you hit your target and you have no follow through, these are all signs of the fact that this reaction is over. Then we come back and set this up for the secondary retest. Once we get out of the zone, that happens. The secondary retest here lines up pretty well with an optimized entry. Okay, but again, look, red line stops right about there. Red line stops there. Okay, we start looking there, and nice pattern. But we want to focus on where it comes out of the zone on that secondary test. That's where it came out of the zone. Line that up with your price. And that's right there. So that's go time in terms of red line stops. We start looking where indicator comes out. Okay, now we're in the go phase. Stuart's asking, do we look at the same fib ratios in RSI or just the pattern? We look for the patterns with the RSI. You can apply those structures, but the 113 and 1618 are minimum retracement levels to define the divergence. So we talked about a lot here just in RSI and RSI BAMM. There's a lot of things going on here, and it's critical to understand that these impulsive and complex formations, they define the environmental situation. We'll look at some examples in a minute of bringing our new expectations with the price action. So now when we see a pattern completion, and let's say we have a complex formation there, then we know, okay, this situation might take more time. Also, the reaction from that pattern is probably only going to be that, a reaction. We'll look at, this is really important in short-term, say 1 minute futures trading, 233 tick, 5 minute time frame, where you catch a great move, but you know it needs to be retested. These are great ways to know when to get out, when to pull the trigger, when not to. The best situations for all of this will be at the D point. So again, as I said over and over again, we want to look for when the pattern completes, and look for when the red line, when that red line stops, like this, right here. When that red line stops, what's after it? So it's early, but again, tell me what's going on to the right of that red line, much like we did with terminal bar. Once terminal bar is established, then we looking to the right. Remember, we can apply the same framework to amplified RSI and HSI. HSI is a little bit different, and I want to get into HSI because that is our primary validation mechanism. I wanted to talk about RSI first because there's so much about the indicator framework that helps us to understand what type of HSI we're dealing with, because we want to combine HSI with amplified or standard RSI as a minimum double confirmation method. We'll talk about that. I've discussed these tools on the harmonic pattern collection before. Now we're going to apply the specific strategies. So let's look for, first of all patterns with some indicator element that has to either have RSI, HSI, amplified, at least one to validate any opportunity. This is important because I know a lot of people have asked, can we take a trade without an indicator? Can we execute right at a 1618? And simply no. Simply, there's just too much going on for us not to at least have one indicator with us. So let's start with HSI and harmonic strength index. How that came about for me was from all of the work I did with RSI. And the RSI is fantastic and is a primary validation factor for me for any pattern. But HSI and the advancements we were able to bring into it just expresses the reactive nature in a better manner. And it also moves from extreme to extreme. So it's a mandatory requirement for all executable opportunities. What we're going to get is usually in early reading, we're going to get HSI give us, a clearer early signal and a very key price bar. Whether or not it works out, what we're looking for is what happens immediately thereafter. And then notice how all of these signals, we wait for them to complete, and then it's literally the next bar. It is that action on the next bar. So we identify what's going on, and then our action is in the next bar. And so we have this in HSI because we're monitoring and do monitor the progress of the indicator, but we see this happen early and give us that signal where our expectation is in the right place. So HSI will generate on the software. It will give you a pink arrow. You're able to change that. By default, it's pink. I think, the pink stands out. And that gives us a really clear little trigger, especially in pattern zones. Hey, Jeff. Jeff's asking about HSI. If you get them with divergent readings, is that a contraindication of taking a trade? Yeah, well, I'm going to show you that in a second. Okay, so really HSI, though, to that point, is important to recognize is the primary variable. HSI is the primary harmonic indicator variable, should be for everyone going forward. So take that in, because if you don't understand how to apply HSI, well, we'll do that in today's session and tomorrow's session. Also, the priority of indicator, or even the mandatory requirement for your pattern trades, is probably new, and you probably don't recognize the severity of that requirement and how important it is, because with it, we can make a whole bunch of assumptions that we can't without. So let's look at this example here. S&P 500. It's a 30-minute chart now, folks. 30-minute chart, ideal bat pattern, everything that you want to see in the bat, stabilization, terminal bar happening. Then we trigger, okay, and we get the check back. Now, let me show this first. Here is the larger structure. There's the terminal bar. And then remember from our discussion yesterday of the last little retest, if it's +1, +2, +3, you're getting a little ditch retest, terminal bar, either XA or terminal bar low, but that is the basic expectation. So when that completed, that was a pretty big red candle. And then the second candle was red. Third candle was red. Finally, we've got a little green bar. But that's not a surprise because we do expect that little last retest. And also remember, if we're talking 30-minute a bar, each bar is 30 minutes, you have 90 minutes to react. Think about that. A pattern that stretches 2 days and unfolds during the day, giving you 90 minutes to make a major decision. Now, it's actually more time than that. But within that window of zone, even though it doesn't look like a lot, you know you've got a substantial formation, confirmation in that window. Now, we'll talk about type 1, type 2 tomorrow, but we still are looking for reaction. We're just expecting reaction here. Even though it was a massive move up, our focus and our reactive, when we see the signals, we see little green candle go on, we're targeting just target 1 for starters. Again, tomorrow, I'm going to talk about the minimum framework and why we want to think in that minimum framework, because when the larger moves come, they will blow out our minimums. But if we focus on the minimum framework, okay, it's a lot easier and clearer to focus on the metrics that we need, the stop loss, the trailing stops to protect our positions. Really critical. Now, let's look at the check back, because that check back with HSI, again, HSI, the first register of the signal, is early. In most cases, there are situations where it will signal and go. And we'll look at those tomorrow. A little more specific kind of, those are situational opportunities, but I want to focus on just the primary confirmation methodology of the check back, where the price action will form. We will get the signal on the close of the bar where it will hit the oversold and pop out. The oversold is 11.3 in HSI. Overbought is above 88.6. So it has to hit that or go below and pop out. Now that will form on the close of that bar. You'll get a pink arrow. And then what do we see? We usually see in the first 1, 3, 5 bars, usually not more than 5 bars, I would say. You might get a delayed, but it has to be the emphasis of an immediate check back should be the focus. Also, we can monitor the indicator progress as it comes out of the zone. The key, what happens on the check back. And I always have said this in our sessions, and I'll emphasize it today, is that we want to bring the terminal bar concept to the check back, meaning whatever this price bar is, okay, that hits, treat that as a terminal bar. There has to be a finality on that retest. And let's look at what happened here, because that gave us right back into the zone, an immediate retest down here. And I'm probably probably could have chosen a better example than this, but I want to highlight the simple fact of the signal, the check back in the zone. I would have preferred to see this thing maybe retest the 886 because it already hit target 1. And we'll talk about those distinctions tomorrow, but the emphasis of recognizing this signal, coming back, retesting in the zone, and a lot of times being very close to the prior low, critical. Also, the other aspect is that wherever that check back happens is usually where the larger move will come. So if we're trying to look for a signal, maybe try to execute down in here where we're trying to capitalize on the 886, that was almost a perfect 886 off of that zone. The larger moves are still going to happen on the check back, no matter where that check back is in the zone. Again, I have preferences of where I want to see that check back, but it's not in every case ideal. Quick question, do we have 3 indicators on the TradingView HPC Lite? Not yet. I think we will see an advancement because of their new update. But right now we have amplified RSI, HSI. Sorry, we do have HSI on there, but no RSI. And I don't think that's going to be too difficult to bring in standard RSI. So yeah, we do for that. On the other one, we don't. Let's get into amplified RSI really quick. There's a lot more on HSI that I can do, and we're going to talk more about HSI tomorrow because it is really just a dynamic indicator for both execution and trade management. I want to talk about amplified RSI just for a few moments. It is critical. It's important. It shows us things that standard RSI won't show us. And for me, it really was a magnification of the standard RSI readings. We've talked a lot today about different formations, the different indicator formations, your complex reading, your W versus your impulsive, your V formation. Okay, that's not always showing up in RSI. And there's a lot of instances where RSI fails to give us that information that really can be helpful. This is where amplified comes in. The other benefit of amplified RSI is since we're going to get more readings, we're going to be able to see the complex formations more clearly, where we might not get a full extreme test in standard RSI, we will in amplified. And we'll understand what type of reading it is. So that kind of gives us a little more indication of what to expect. This comes together with our HSI as well. Clearly, all 3 gives us the best confirmation, but it is important to know that amplified really is a complementary indicator working great with the other 2. Quick question. What other scenarios can be considered for the acceleration trigger of RSI BAMM? Can be applied only with amplified RSI without a previous RSI BAMM. All right, let's break that down. Okay, so what other scenarios for the RSI BAMM can we consider? Again, RSI BAMM, when we talk about that, we're talking about the total framework. The complex structure, go to the 50, have a retest, 2 tests in RSI. Or better way, 2 tests in the indicator. Now, let's look at it from an amplified perspective because amplified will show it more. And yes, we can apply it, but it's not going to be as strong. Well, let's look at that because we have that right here in this very situation. So great question. Here is that S&P chart on the 30-minute. And look at how HSI comes in and amplified gives us that reading. That double confirmation is enough. Now, I prefer triple. And here on the bottom, RSI didn't get there. Fell just shy. That's all right. But there's enough there, okay, with HSI, because HSI is the key, and we do have a pattern that we look at that as a reaction. And I think it's a good example to show this because even though the secondary test here, this consolidation led to a much larger move, we're always thinking in the minimum framework. So if I'm looking at that 886 at 37.17, my expectation is 37.24. That's a minimum. And I know I can get there because I've got 1, 2 of 3. HSI, as I started with in today's presentation, that's now our primary harmonic indicator. It's got to be there. And we base our other indicator decisions if it's there or not. And you know, an HSI can invalidate an entire RSI BAMM. So that's the key. You start with HSI. Claire's asking, that's a good question. How to interpret HSI when that goes up or goes down when RSI goes up. What she's saying is when you have counter signals. Okay, this is why I'm emphasizing HSI has to be your guiding indicator, because if that doesn't link up with the other indicators, you are simply either going to accept it's going to take more time, okay, or your RSI is not going to work. HSI, Harmonic Strength Index, is that filter. That is the validating factor. One more question. So if the RSI at the D point forms a W, when there's a high possibility of price action coming back for a secondary test, if the RSI at the point D formed a W, then there's a yes. In other words, what the question is, what do we expect with these W and M complex formations? And we expect them to be retested. The impulsive reading, whereas with the V formation, you're asking, there is a chance that price action may continue beyond target 1 and target 2. Is that a correct assumption? Yes, that's correct. We will have minimum expectations with these formations. That's how to look at it. Okay, a complex formation, our expectation, it's going to take more time. It can give us what we need to see to confirm the pattern, but we're always going to assume a reaction until we're proven otherwise. And that's a good way to go. Now, all of this, guys, is available in my Volume 2 book. And you can get that in the Gold Members section. Download it from the PDF area with the books. Because this shows you the detail of all of the classifications of the indicator structures in general, because we can apply this all the same, and with a lot of examples of RSI, BAMM. So do check that out. So a lot going on here. I mean, a lot of material, and I think this is the best place to stop, because we need to digest and bring in these other variables. We moved past pattern completion yesterday. We started today going from where we left off, which was the terminal bar, what happens at the pattern completion. So now we get the sun icon and on our patterns. Now let's just look at one. And how do we handle that? Well, everything begins after that fact. And we saw today, okay, complex formation, impulsive formation, RSI BAMM, confirmation, divergence. What do these mean? What are the expectations associated with them? We looked at how the software will highlight where these stop, or where they begin, really. Where does RSI BAMM form? Where does that red line or that green line stop? What does that mean? Okay, and we're looking for that, and we're monitoring the indicator, the structural indicator progress, as much as price action. This will come with experience, but we'll coordinate that indicator confirmation at the terminal bar or just beyond for the clearest opportunities. So do understand that you are starting to tie your shoes. You're really starting to tie your shoes here of putting together the measurements and the expectations. 1 minute, please. So everything that we're doing, folks, okay, with the indicator framework, and I'll call it a framework because that's what it is, especially RSI BAMM. And I think let's go back and take a look at that framework. Just really important again, because we know that HSI is that's our primary main indicator now. Okay, there's the RSI, and let's look at the framework. But now the indicator framework comes in where we're looking for a specific sequence. Do you have the tool of formation to scan these formations? Yeah, tomorrow, listen, in the management tomorrow, we're going to look at how to scan for these. We're going to look for how to scan for setups and then recognize what's going on there. So yeah, a lot of this is automated, and the patterns are automated. And again, we want to look for terminal bar pattern completions, and then we can bring in some of those other signaling in the scanner, and I'll show that tomorrow. But what we're talking about with this framework, we've got a pattern framework now, right? That's what we talked about yesterday. That gets us to terminal bar. The terminal bar encompasses all of our measurements, and those are the correct harmonic measurements. That's what defines a harmonic level. If they wasn't harmonic, we wouldn't see the reactions we see, right? I mean, I don't need to convince anybody of what you're looking at. That's why everyone has the software. That's why I mandate that everyone get the software, because it's no use of me to teach everyone anything, okay, unless you have this understanding of what's going on here, of combining the signals. What's behind the signals? All right, I showed you guys how the red line turns on, the green line turns on. What do those mean at the pattern completion? They have a significance. And there's greater detail in the volume 2 book. So what I discussed today, actually kind of almost an overview. There's a lot more that you can go into. I'm just trying to say, bring together those concepts, bring together those situations so you can define and reinforce your levels. Yeah. Hey, Jeff. Jeff's asking, well, how to bring this together. Again, tomorrow, guys. Tomorrow is what then we bring it together on the management. So yes. So in terms of Jeff's asking, how do we do it in terms of entering for the trade? Where do we put the stop? How do we look at the check back? That's management. Everything that I'm talking about today, okay, is to highlight what we need to see and what factors constitute me actually responding to what the harmonic pattern is telling us. Tomorrow, in terms of management, we're going to talk about relative to type 1, type 2. That's really important. That's where those strategies best fit, is in terms of management, the type 1, type 2, because the reaction and the reversal expectations are different. They will employ different trade management strategies, and we will employ different stop setting strategies, as well as, the positioning, location. We have to build the evidence behind us at the pattern. And that's what that management framework does for us. The other thing that we will look at is what happens as this comes out of the zone. So if we have a pattern up here and it sets us up, tell me what the indicator does as it's coming down. Did we form an M formation out of the indicator to really get it going? Are we breaking down below the 50 line? These are all management strategies that we will look at that help to get us from D point to target 1 or D point to target 2. Really critical. Yeah, let's just bring it back here. A couple more. So on which platform does harmonic pattern collection work best? Okay, so really quick, let me explain that, and I'll bring up that other one as well. So all the harmonic pattern collection platforms that we have the Pro, which is good for Sierra, eSignal, Ninja, and MetaTrader. All those versions. They have functionality because their script can enable it for third-party programmers. The other one, TradingView, and some of those others simply don't have the capabilities that the built-in platforms have. I expect that to change eventually over time. But for right now, we're giving everything we can within that within the capabilities of their programming language. So that's why I recommend everyone get yourself TradingView, HPC Lite, and get a pro version, whichever one you want. eSignal, that's the one we're working on right now. That's best, okay, because I think they've got the best data. But all of the algorithms are designed in the same manner and to yield consistent results. The only issue is that sometimes you're going to get maybe some slight data changes because the data might be slightly different. 1 second here. Bring this back. Let me bring up the other one. So let me bring up the Signal platform really quick. And we'll look at a couple of examples as well. So do check that out. If you have questions, send me an email, please. Scotty, what's up? Scotty's asking, the dotted line on RSI BAMM, does it start when a complex RSI comes out of the zone and returns? Yes, it does. And we'll look at that in a second here. Let me bring that up. That dotted line's kind of, that I showed that earlier in the presentation. That highlights it serves two purposes. One, it shows you that there is a complex structure there by mathematical definition. So that's important. I think that's something where if you understand you have a complex structure, and again, this is where the automated algorithms really help us, then, hey, I'm not going to go against what the computer's telling me because by definition in my algorithms, that's correct. Give this a second. I think this is going to take a second to load. So do understand that that's important. It also marks the extreme. So the highest reading or the lowest reading in RSI. And that can help us in tomorrow. Again, this is where the overlap continues. There's a lot of overlap between execution and management and trying to separate the strategies so we can be really specific, especially tomorrow for what we're looking at. I don't know why that's not loading. Let me just bring up something here. Let me bring up, see if I can get another chart. Oh, I know why. Hold on 1 second. This will help get us a chart. And let's look at, I'll look at 1 or 2 examples here. There you go. Well, no, let me restart this. Go again here. Oh, and let me bring over this one. Here, I'll bring over TradingView as well. We can do a side by side. TradingView is going to give you many of the similar patterns. Again, it's just the limitation on the script functionality. And here you go. There's, yeah. I know someone didn't want me to look at Bitcoin. I've just popped this up because I run the TradingView for crypto mostly. And look at all the patterns. I mean, just that's a 5-minute Bitcoin chart back and forth. But again, here it is. Here's your HSI. There's standard RSI. And I'll ask my partner if we can bring that standard RSI to everybody. And then amplified on the chart. And again, look at the highlights. The highlights of where the complex structures come in are helpful. That's standard. That's the TradingView Lite program. But let's go to the better one here. Let's go to eSignal. This is more comprehensive. This is our scanner. So everything that we can do, and tomorrow again, I'll go into the scanner because we can do this on Ninja, Sierra, eSignal, all of these. We can bring in some of the other indicators in here to signal in the scanner. Now let me just go to the chart. So really quick, let's go back to Scotty's question of just the dotted line. Okay, and let's go to S&P, NASDAQ. There's NASDAQ, NQ. And Scotty's asking for the dotted line. What Scotty's saying is, okay, what is this dotted line right here? It's kind of tough to see right there. I'm going to highlight that. What does that mean? That shows you the last complex structure. It also shows you the peak, the highest RSI reading. Why is that important? Because if we get a violation of that last peak in RSI, that usually means a continuation. That's a strong move. And you go back and you look here, there on standard RSI, okay? The last notice it's not just the last reading, but it's the last complex structure. That has significance because the complex structure, the way to think about that, that's so dominating that if you go back and you form another complex structure like you did here, the whole process will reset. I could spend a whole another 2 hours on RSI BAMM, but that's also something to consider. Okay, so if we have a complex structure and it gives you a reaction, comes back, retests, and you form another complex structure, the whole RSI BAMM starts over again. What does that mean? That means this is just a reaction and we get another reversal. That's why, look, we're dealing with the NASDAQ right now, okay? And we're going to know really soon what type of formation we get. If this breakout on NASDAQ's really strong, we should get another complex structure. And we'll get a pullback, no doubt. But if this is going to really bust out, we should see progress up into here. And we kind of see it now. Here's a great way to look at this where we're getting triple confirmation, 1, 2, and 3, but still early. Notice HSI has not validated yet, and RSI amplified RSI and RSI are still in their respective overbought zones. It's going to take time. The other aspect of this NASDAQ chart is look at where the red line stops on both in our last reading, there and here. So amplified and RSI both have an RSI BAMM formation. And if you just set your cursor, it goes right there. So we're looking for a major reversal because we have 1, 2, 3 indicators. We have HSI, amplified, standard, all there. That's triple confirmation, folks. Okay, and notice how HSI, the pink arrow, that was the key, and that highlights why I say there's the signal, there's the check back. But that's why I say HSI is the primary filter for all indicators. We have beautiful RSI BAMM bearish, amplified RSI BAMM bearish completed with an HSI. You would have thought that thing would have started the next bear market with that many signals. But we got a big reaction, no follow through, and look what happens. Again, tomorrow will be all about trend lines. Talk a lot about trend lines tomorrow. But the fact that this gave you a reaction and no follow through, and now we break out, that's a major significant point. That's how we then can bring together even prior readings or what should be happening at convergence of three ideal triple confirmation with RSI BAMM. Tells you that 12.8 level that just got broken out is a major violation. Big stuff. That's how we stack our expectations to understand there's a lot more here going on. Another question. In the extreme scenario where price action blows through the PRZ, does the sun still trigger? No. Look, until you might have a potential pattern getting generated, and I'll bring this one up and we can look at that. But until that pattern turns green with the sun icon, don't have anything. Let me see if I can find on the 5-minute chart. Thought there was a potential crab up here. I mean, that thing rallied 100 in the last hour on Friday. I don't have a potential yet. Oh, I know where I have potential. Here's a potential. Here's the potential. Okay, again, 13.6. This has been our target for how long, guys? Here's a potential crab pattern. So the question is, if we don't have a sun icon, let's say this thing blows right through and we don't have a sun icon. Okay, does it automatically get canceled? Yes. There's no, if you don't get a sun icon or this doesn't generate and turn red, there's no structural opportunity. That was really the takeaway from yesterday. Nothing starts until we get that terminal bar. Now look at it. I mean, look at this clearly. Look at the crab forming. We're in, for the 5 legs, and our last HSI signal is bullish. That's a clear continuation up to our targets. We bring our other indicators behind it. Look what's going on here. Okay, there's no coordination. There's no triple confirmation or anything like that. That's going to tell you it's taking time. And HSI in all of that still tells you that it needs to, this has to come all the way up and complete before we even get another signal. So which way is this going? I mean, clearly we can just follow HSI from extreme to extreme. That's something else that comes with some experience. But if you take your time and look at HSI, the way that develops, you will see that, and it'll act like a guide. Hey, Michael, you might want to check your color setting. That might be why. Go into the settings there. Any chance that the HPC will be an independent app, meaning a web-based app? Maybe. That's a whole nother beast. That's a whole nother area. A couple more. Hey, Mike. Ninja 8 shows stop loss, the hop not the same or both the same. Mike, can you send me an email on that? Send me a chart that you're looking at. A couple more, guys. Let's try to wrap it up, okay? Hey, Marcus, again, send me an email, please, regarding your needs for the data. Yes. Yeah, I understand. The reason why eSignal is expensive for the data is because you're paying for an institutional data feed. That's the same as you get on Bloomberg. It's from Intercontinental Exchange. You don't have to pay for that data. I do, and I think it's worth it. I think if you can pay for the data, the institutional data, especially the aftermarket data, get it. If you can't, you're not gonna. It's not like you're gonna suffer, but I just think in today's world, data has never been more important, and your data source, especially for currency markets, yeah, you can't compromise. It's some of those smaller currency brokers as well. Stick with the big boys. Stick with your data feed is so essential. And some of these smaller currency brokers have been problematic for sure. Couple more. So is this ready for a short per day or your entry for a short based on this pattern? Listen, we're looking at this NASDAQ pattern. The question is, are we going to short it when it gets up here? Right now, I'm just utilizing this pattern as a target. And I've been saying this for a while, that favoring long positions, looking for an acceleration now, even after the first 2 days where they sold it off pretty hard. This remains our target, as I will feature tomorrow, okay, in terms of management. This gives us direction. and also gives us an idea of location because it's a deep crab. I've talked about this in our gold member sessions, and I really emphasize that people should be attending those sessions because the markets are moving so quickly that we are in a spot where we will reach above that PRZ based on the fact that HSI is lined up. We have basically 4 of the 5 legs, and we look at HSI, where HSI is, that has a long way to go. In fact, it just cracked above the 50 level, and the 50 level is really important because we see that as a point of acceleration. The indicator can break above the 50 and go. We see that acceleration. The other aspect of this move, I've highlighted this before in the sessions, is look how long we've held above the 50 line. That's all trend continuation. And that's the CD leg of this pattern. These are all signs of the fact that this CD leg will complete. We will go another 500 points higher. Now, that's how we bring together all of our expectations, assessments within the structure, and that's our minimum objective. Again, this is where a minimum objective can come together, and if this thing really blasts off and goes to 14,000 or higher, well, we're ready. We're already on board. We know we're already expecting that, but we're using that as a target, and then when we get up there, we'll look for HSI and go from there and build our case. If we want to short it, build our case from there. But until we get there, we got a long way to go, and that long way is up. The same principles apply for RSI BAMM to HSI. Yes, but generally. Can we look for, say, divergence and confirmation? They do, and some of those are helpful. Again, I'll highlight some of those relationships where you do have maybe 2 tests. Certainly, it sets a make or break level where you have multiple HSI tests should not be violated. If it's violated, like what we're doing here, look, you're up against 1, 2 HSI readings, and then we get a bullish reading and we break out in that kind of a fashion. That is an extraordinary situation. That's an extraordinary breakout move. We were signaling that, back in December, this condition, and we're looking at just this to do a trend continuation. Now, again, tomorrow, we'll bring in a couple other tools that we look at that help us to guide us. How do we get up there? We can look at, say, Pi 5 bands. We can look at basic trend lines. But everything we see here, yeah, that's in the final CD leg acceleration up to complete the pattern. And we stay with it. Do you get complex structures in HSI? Yeah, you do. Look, here's a complex structure right there. Okay. And it takes a little bit more time. I think the key is to recognize that we still wait for HSI to come back, check back. HSI also can go a little deep, like in this instance, in the last daily bearish reading. Okay, that went pretty deep. It went above 100. Okay, but the key is still the fact that you wait for that to signal and come out. It signals, we look for the check back, and it comes back. Yeah, it checked back, but it didn't do anything. And that's, again, our segue into tomorrow is that's why management's so essential, because we're going to generate the signals. We still need to respond. And if we were looking for a short opportunity, which we weren't, but if we were and we entered on this check back and all of these levels generated by HSI, it goes sideways for 5 days and then gives you a bullish reading. So at that point, you can no longer be bearish. These are all management decisions we'll talk about tomorrow. A lot going on here, I know. When can we expect a scanner in TradingView? I'm asking TradingView. We'll see. I'll keep you posted. HSI and price moving in opposite directions are a sign of big divergence? Absolutely. Listen, again, that's another management issue I will look at tomorrow, but since you brought it up, when you get an HSI, and this is why I said HSI is so critical, it's the primary indicator. So when we get HSI here you go, all right, you get a counter HSI signal. So here's a perfect example, 5-minute HSI, 5-minute deep crab pattern. And what are these other ones? Take away, just show this last one right here. Okay, this is perfect. And HSI is your primary indicator. That's a huge takeaway from the day, that HSI has to be in agreement with your pattern. If it's not, it's going to take more time, more consolidation, and go against you. The primary trend will be in control. Here's a beautiful deep crab, folks. And look what happens. Okay? You get pink arrow right there going in the counter trend direction. Your completion is there. Little reaction move. All right, and here's the indicator right here. HSI signaling a bullish reading against a bearish pattern. Every time, that either is going to cause you to close the position at a small loss or get super defensive and close it on the first trend line violation or 3-bar violation. Again, we'll talk about that tomorrow, but let's just recognize it for what it is. Okay, beautiful pattern every time. Love it. Love that deep crab every time, but look how it responds. You get one, okay? You get one HSI right there. You get a second bullish, 2 bullish HSI signals. Look, there and there in a big bearish zone. That is a sign of a flawed PRZ. Again, failed flawed, we will talk about tomorrow as well. Also take a look at this, and this is to your question about counter HSI. So there's another, here is standard RSI, RSI BAMM that completed. That's perfect right here. And you have amplified RSI BAMM right here. So that's ideal RSI condition that you want to see. But HSI signals a bullish reading. In every case, you're assuming that's going to take more time, and these still might be valid, but they aren't until the next HSI signal, which comes all the way over here. That's why HSI is so critical, because that is your first indicator decision every time. Everything that comes from that beyond there is not going to work. You got to consider it that way. Couple more. VJ, send me a chart, please. Jeff asks, have I noticed any positive correlation with how extreme indicator goes before reversing shallow versus deep and the size of the move? Absolutely. Listen, you have that right here. A lot of what the question is, how far into the overbought, oversold extreme it goes dictates what kind of reversal will happen. Usually that's encompassed within the complex behavior. Okay, so you're going to get a major move. You're going to get this to thrust into the overbought. Here you have a pattern completing. It's forming, hasn't completed yet. Okay, and you spend a heck of a lot of time up in here. Okay, that means it's going to take more time to consolidate before you can even get a reaction down to target 1. You will not get a reaction as long as you have that. That's called indicator expansion. Again, that's a trade management topic of discussion for tomorrow. But when that expands into the overbought or oversold, you're simply waiting. You stand back. And yeah, it's going, so the depth of that reading just means it's going to buy you more time. And it also means that it's HSI is even more important. You got to link those up. TradingView, hey JT. TradingView is sometimes their pending patterns are, they don't, it's the script. It's the script issue in the TradingView. That's why I'm giving you guys everything that you need for this package. Get with the pro and run with TradingView so you've got both. That's the best advice I can give you. So absolutely. Hey Tim, I'll get to you on an email too. I missed your call, but you and I need to get set up. So I'll contact you. Couple more. Last one, Mike. Mike, you're the last one. So is there a general guideline based on my experience on certain patterns materialize better than others? Say a deep crab better than other patterns. I'm going to agree. Look, I love the deep crab pattern, the structure, everything about it, as long as it has confirmation. And that was my point yesterday, is that the terminal bar is so essential to everything that we do. And I can just pop up a chart of these, and let's highlight terminal bar. And not with my point being is that the type of pattern, definitely that can influence it. I love those crab patterns on the type 2. I love the bat patterns on the type 2 when they retest. Okay, those definitely are great stuff. But I want everyone to start to train their eyes more towards the sun icon. And as I've said before, and we'll look at tomorrow, is the sequence. And that sequence that we look at is the sun, arrow, go. Yeah, exactly. So as I was saying it, Tim typed it. What does that mean? That means we get the sun icon. Then we get an arrow in the direction of the pattern. And then we're looking for that execution based on what our indicator is telling us. Here, in this instance, if we say sun, arrow, go, well, sun, but the arrow is against us, so that's a no-go. Another one, bearish, no-go. There'll be a lot of people that might enter that trade and sit on that trade all the way up. Okay, and that's why we utilize HSI to locate trades. This isn't a bad spot here. There's your first pink arrow, bearish, sun, arrow. Now I'm looking for the check back. Okay, but that's up at around 12,960, not 12,920. And even that didn't work because look, pretty strong, goes up sideways. And here you have a bat pattern in the zone. You would think, okay, that's got to set it off. Maybe a nice little bat inside the larger zone will get me a major reaction, but it doesn't. It doesn't, because we violate that 30 bar rule. And that 30 bar rule, that's where we're going to start tomorrow with the management, because our management, these signals, these triggers, all fall within that 30 bar window to establish the final minimum expectation. Everything I showed you guys today was about looking at these, first utilizing HSI as our primary filter, but then how to look at the other strategies and what expectations to have. And still, they have to unfold within a specific window. And that's why tomorrow we're going to talk about that management window. Yeah. Hey, Mir. Yep. Mir's asking, so higher time frames, like a 30-minute or 1 hour, do they make a better or less complex solution for a reaction? That's, again, tomorrow we'll look at that, because there are instances where we can utilize the longer time frame. Look, we can trade off of like a 60-minute signal, all right, but they are for a lower time frame reaction. And we talk about that in the gold member sessions a lot, where we utilize the larger time frame, and we can utilize those for big levels for day trading. Here was the situation from the beginning of the week, beginning of the year. We had 60-minute HSI. We had a deep crab, okay, at the hop level. All of that depends on where did the arrow come in? Right? Where is the signal? Where is the HSI? Because if it's at in the PRZ or the hop, is all determined by where HSI comes in. And you look at that early signal up there, okay, you had a complex structure and amplified. You had almost complex structure and RSI, but nothing up here, not an RSI BAMM. And if anything, okay, here's a perfect example of a complex structure at a really nice ideal type 2 hop level, hits the hop, HSI, and triple confirmation. So you got 1, 2, 3, but that's a complex structure. Has to be retested, right? And bam, that's where it's retested. So no matter what the reaction is off of here, down in here somewhere, we know that that's got to come back. That has to be reactive. So we can utilize the 30-minute, your 1-hour time frames for more substantial day trades. That's probably the best way to really describe it. Now, we will get into this. You see how this framework can come together time and time again. A lot of different combinations. The point, though, with all executions, folks, treat them all as reactions first and work within that minimum framework. Here's the 60-minute NQ. We're looking at this deep crab right now. Folks, where is this going? Where is it going? Okay, because look, amplified is back in the zone. No HSI. RSI still up there. This will be at 214 by Monday, if not Sunday night. It'll go straight to the hop level. And we won't even consider that until the next HSI. Why? Because it's after the sun icon. It's in the PRZ. It's a deep crab. All of the signals targeting that it's not even a consideration for a sell opportunity until we get probably up to the hop, or at least generate our next indicator value. And we haven't done that. These are expanding in the zone. So that's something for Monday we'll look at in our gold member session. Tomorrow, all about management. And that's where we bring it together. That's where the management strategies of how we look at everything tells us when to bail and when to stay in. So much like that to consider, because look, half the battle of turning harmonic patterns into actionable opportunities is having the right expectations and acting on them. And that's what the management strategies will do. Will tell us when to hold it, when to fold it, when to expect reaction, and then when to really look for reversal. Because as I said, when we started today, we're always managing for reaction. That's our minimum expectation. And I'll show you tomorrow how we get to reversal, because those signs will just blow out our minimum expectations. Take some time, look at the sessions that I'm going to post. This we'll get this recording up later today. Do get the book. Go get volume 2. If you haven't downloaded that book, by all means, go to harmonictrader.com, get the volume 2 book, because listen, that's going to explain the finer points of the RSI BAMM. And that's really like an entire manual, if you will, on RSI BAMM and the confirmation strategies. The indicator framework, folks, that is something you need to learn, because that will improve your expectations. That will, in much the same way we'll look at trade management framework. Now you know indicator framework. So go here, go get the volume 2 and click on there and access that PDF, because everything that we talked about is in detail. And that was, listen, this was done long time ago. I released this 15 years ago, but this volume 2 book and everything we talked about today took me about 4 years to put together, if not longer. I know there's a lot going on here, but we can now look at it and use it all within the automated signals and coloring and icons of the patterns. So definitely. We'll talk about that tomorrow. Yeah, guys, this is all recorded. And I would not do this without recording it. And it's for gold members. So you guys have questions, get with me. But listen, over 2 hours today. I expect tomorrow to be as long. We bring it all together tomorrow. But we have finally installed those other pieces of execution and what to look for that validate an execution. Now with the management, we'll go everything from what to expect to how to place those orders and where to place them and how to manage. That's what I have for today, folks. Great session. Really, happy that we can get this done. We'll be back tomorrow at 12 noon, 12 Eastern, and we'll go full 2 hours, and that'll bring it on home. You have any questions, get with me. If you're not with either software, Harmonic Pattern Collection or Light, send me a note. It's up to you. You guys have to get yourself going with the program and then get back here tomorrow at 12 noon. Thanks, everybody. Great one. Great session. We'll see you tomorrow. Go get them.